Hey everybody, welcome back. My name is Matthew. Thank you for joining. In the last video, I showed you a breakdown of the balance sheet of the Federal Reserve, of the Central Bank of the United States. We had assets as positive numbers. We had liabilities as negative numbers. You could see the variation, the changes of the balance sheet over time. So do check out that video if you're interested in that. That was the central bank. All right. It's a much smaller balance sheet than the government itself. In this video, we're taking a look at the balance sheet of the U.S. federal government itself. And where is that recorded? That's recorded under the agency of the Treasury. Okay, so this is the United States Treasury balance sheet. All right. And I'm starting out with liabilities here. Okay, so I only have this data at the moment from 1994. This is total liabilities of the United States Treasury as is reported annually by the Treasury. You'll notice here, first of all, this is year-end September. See that? September each year. And I'm recording this at the start of October. So 2024 is being formulated right now. It will take a little bit to come out, but the United States Treasury has their fiscal year end not in a calendar year, but September. So this goes until the end of last year. Now, of course, you see, as is typical with these things, this is an exponential increase in the debt. And from 1994, the balance, total liabilities of the government was $5 trillion, $5,357 billion in 1994. Today, or a year ago, 42 trillion, $42.8 trillion. Basically $42.9 trillion. What's one thing to immediately say about this? If you're familiar with the national debt, what is the national debt? And even a year ago, a little bit less than 35 trillion, which it is right now. It's $35 trillion today as of this recording. So how could it be that a year ago, the total liabilities were 42.9 trillion? Well, it's because the national debt only counts the actual bonds and bills and notes that the Treasury issues. Okay, those actively traded pieces of paper that you and I could go out and buy, or foreign investors could go out and buy, or the Federal Reserve can go out and print money and buy. Okay, so that's the difference there. Those are actively traded pieces of paper. The liabilities are a few other things that are included there. Other loans that it has to other branches of government or other governments, perhaps. Also, this thing called agency debt. And if you check back a couple of videos, we talked about the Social Security fund, the trust fund. That is an agency asset matched by other government agency liabilities. And some of those are included here. And I say some because it's not quite clear. Some agency debt is off balance sheet. I'm not sure the exact breakdown at the moment, but nonetheless, the on balance sheet debt that is included is $42.9 trillion year-end September 2023. So, as I've told you in prior videos, and as most anybody with a basic accounting degree knows, assets will always equal liabilities plus equity. Assets on the left side of the balance sheet, liabilities and equity on the right side of the balance sheet. So we have total liabilities here at $43 trillion roughly. We would assume that total assets would match that. So let's report here what are the total assets of the United States government on the positive side of this chart. Pretty interesting. From 1994, we see that there's a gap, $5.3 trillion in liabilities. Total assets are only $1.35 trillion. Interesting. And as we continue on to today, that gap seems to grow. Now, total assets, or a year ago, I should say, $5.4 trillion, and total liabilities, $42 trillion. So if we just do very, very basic math, we're looking at roughly a ratio of 8-to-1 total assets to liabilities today. And if we go back to 1994, the start of this data, so roughly 30 years ago, the ratio of total liabilities to total assets is only something like 5. Okay, so total liabilities have increased from a ratio of 5-to-1 to 8-to-1, roughly. So it's not going in the right direction. We would hope that as a government, you could have less liabilities as a proportion of assets. But really the elephant in the room here is, how can it be that the government's balance sheet doesn't match? And the answer is, the government is the only institution in the world where the balance sheet is allowed not to match. Hope you're finding these videos creative and to the point when it comes to navigating the rough waters of the financial system. And I'm happy to share with you a platform that can do the same when it comes to getting a loan secured by your Bitcoin, and that is Debifi. Debifi is a non-custodial, Bitcoin-backed lending platform designed for people who want to borrow against their Bitcoin while maintaining full control. Debifi offers institutional-grade liquidity through independent lenders, allowing for high-volume loans of up to 5 years. All transactions are secured by a unique multi-sig escrow system, ensuring that Bitcoin collateral remains safe and transparent. This setup guarantees that your Bitcoin is not rehypothecated, and you keep full visibility and control throughout the loan process. It's perfect for those who value security and transparency while exploring global stablecoin and fiat lending backed by Bitcoin. So head on over to Debifi.com today to get started. Because think about it, even if you have a lot of debt personally, your balance sheet would actually match. If you had little assets and a whole bunch of credit card debt, your balance sheet would match by having negative equity. Here, the balance sheet should match, and the government should declare itself bankrupt by saying we have all these liabilities, very little assets. That's simply a case of a huge quantity of negative equity. The government should be bankrupt. As we know, governments, at least on the federal level, and especially with strong states, typically don't declare themselves bankrupt. And in fact, if they're going to default, it's going to be what is called a soft default. They're going to keep increasing the amount of liabilities that they have, and they're going to keep printing more money if they need help from their central bank to buy up some of those liabilities. And as I've shown you in prior videos, the Federal Reserve has owned at times up to 30% of the total publicly traded bonds, which is a smaller number. It's about 35 trillion now than this 42 trillion total liabilities. Now it's down to about 20%. Okay. Nonetheless, large sovereign states typically don't go bankrupt. Now they certainly can. Not saying that they can't, but the typical practice is to just do a soft default and still pay your liabilities, pay your interest payments, pay all your contractors that you hire as a government agency. Just make those payments, but you're going to have to print more money and pay with a devalued currency over time. Now, I want to make a quick disclaimer here. All right, I'm going to do another video on this, the next video. But my point, again, is not to show that default is imminent here for the government or that they can't meet their liabilities even with freshly printed money, which will add to price inflation over the years. I'm not saying that they can't do that. I'm also not saying that they don't have options as the largest, most powerful government and nation in the world. I'm not saying they don't have options, but it is a fact that the United States Treasury, if you actually look on their balance sheet, assets do not meet liabilities, and thus they are the only unique entity in the world which can continue on in perpetuity like this, legally, under the premise of the law, under the premise of the Constitution, under the premise of protecting individuals in their nation state. They can continue on with negative equity as long as other people will continue to buy the debt. And again, I am not saying that sovereign default is imminent. I'm just saying that government is a unique institution in this manner compared to, say, a company where assets are always going to equal liabilities plus equity. It will be reported as such. In fact, it would be illegal to not report negative equity if you were in a situation like a company where you had huge liabilities and not enough assets, book value. For the government, they just don't report negative equity. You can look on the balance sheet of the Treasury and they won't report that it's called negative equity. It's just assets, or as of last year, September 2023, you have to do the math, and they are about 8 times smaller than liabilities. That's how it works for a sovereign nation. One other thing to point out is United States, or states inside of the Union, New York, Maryland, Florida, Texas, whatever, they actually have gone bankrupt. Okay, they don't have the power of the printing press to print more money, to service the debt, to service liabilities, to pay interest, to pay contractors. So it is more likely that states inside a national government go bankrupt. And indeed, they have gone bankrupt in the past. They have to reset themselves. Their bonds, their local government, municipal bonds, they go belly up and they get restructured. It has happened that states get restructured. And indeed, countries do get restructured. Less powerful countries get restructured. And of course, even powerful countries in the world's history have been restructured. So I just want to say, I'm not declaring that this is some sort of imminent problem, but you can see that the United States government has operated, even on this simple chart of 30 years, all right, from the mid-90s to the 2000s to the 2010s to into 2023, the government has operated with quite a large negative equity value. And at the moment, their liabilities are about 8 times their assets. More in the next video. Thanks for watching.